Well, good afternoon. Good afternoon and welcome to another episode of Managing Your Small Business Through the Pandemic webinar, number 51, since we started back in March of 2020. So good afternoon. My name is Kelly Bearden. I am the director of the CSU Bakersfield Small Business Development Center. And we are conducting this webinar live in downtown Bakersfield today. The church bells ringing in the background. It's a beautiful thing. So let's get on. We've got a lot of things to talk about today, a lot of new developments, and let's get rolling. So as many of you are probably aware by now, we're part of America's SBDC program, a program in all 50 states that offers technical assistance, free one-on-one consulting, training programs, including webinars and webinars Wednesdays, along with many other programs. And we're part of the Central California region, which is 14 counties from the Pacific Ocean to the state of Nevada, all the way from the southern edge of Kern County up to the northern tip of Mono County. And there you'll find 6 of us doing work out of sub-centers in places like Modesto and Merced, and also Clovis, down here in Bakersfield and San Luis Obispo, and also over in Monterey County and Salinas. So thank you for joining us. Couldn't be here today without a variety of our different sponsors, our many sponsors that make it available. Provide the services that we do at the SBDC, including Webinar Wednesday. So thank you to all of our many sponsors out there and for helping us make this a reality. So we are in March 3rd. Had a nice 80-degree day here in Bakersfield yesterday. That heat is coming. So what's new on March 3rd? Well, we're going to give you the latest on what I'm starting to now call PPP 2021. Don't have to differentiate the first draw. Don't have to differentiate if it's the second draw. Just that if it's a PPP loan being made this year, it is one of those others. So we're going to look at some of the stuff that's happening with PPP. We're going to look at a number of the trends and analyze some things we talked about last week. We've got a little bit more guidance that we're going to share today in a quick fashion on shuttered venues, of course, not open yet, and that is continuing even with the additional guidance, but hopefully we'll have something soon. We did get some guidance from the IRS that we will touch on, and that is for the employee retention tax credit, and it is for those that are going to want to apply for the credit for 2020, and 2021 guidance is not available yet. But going back to 2020, we had a major law change the last week of the year, back on December 27th, with the Economic Aid Act, and it changed a lot of the conventions that we thought were true. For those of you that are longtime listeners to the last 51 weeks of this webinar series, we talked very little about the ERTC. So ERTC is back, and so we're getting close also to some openings, and starting to see the numbers continue to go down. So we're going to look at a little bit at the opening tiers, what's going on testing wise and vaccine wise. You're getting enough of that in other areas, but getting our businesses open and getting cash flow generated from those businesses is so important. Well, we haven't really talked about much about the California stimulus details and how that affects the relief grant program, the California Relief Grant Program that many of you have applied for, and some of you have received. There'll be more monies available in that, but we'll get into a few more of the business specifics of the California stimulus program. We're going to talk a little bit about the stimulus program that is moving forward. It's the partisan deal, the $1.9 trillion package. We've been mentioning it the last couple of weeks. It really looks like the date for that to happen is going to be sometime around March 14th, as that is when the extended benefits for unemployment expire. Our special guest today will be Keith Brice, and Keith is well known in the Bakersfield community. He was our guest for the first 3 episodes of Webinar Wednesday back in March, co-hosted a number of times, toast, and he's back for his inaugural visit in 2021's. We're going to take your questions at the very end, as always, and a poll question for today. So our poll question today is going to deal with some of the new information that we're starting to find out about EIDL. And EIDL, you'll recall, is the Economic Injury Disaster Loan, which you applied through the SBA portal. And what we're kind of interesting to know is our first poll question is going to be a 2-part question, and it is going to be based on the EIDL advance. So let's launch these 2 questions. I applied through EIDL through the SBA portal and received it in 2020. I received an EIDL advance, and it's just a simple yes or no. We are finding that a lot of people in EIDL did not receive any EIDL advance at all, whereas many did. So we're trying to get a better understanding of that number, the information that we have that's new today. And also, if you did receive an advance, the second part of this question is going to be the size. If you received $1,000, if you're a sole proprietor, independent contractor, or you could have received up to $10,000 if you had 10 or more employees, or the range in between 2 and 9,000. So please, a couple questions on the EIDL front, and so give you just another couple of minutes for those that are jumping on right now to get in. We're got a good, nice sample size going. So we're going to end this poll and share the results with you, as we have about 1/3 of you that voted. Maybe 1/3 of you are the ones that actually received an EIDL loan. So large majority, 93% of you say yes, you received an EIDL advance. And 7% of you have not received an EIDL advance. And the size is pretty well split between the 3 different sizes, with 41% of you saying you received $1,000, 31% $2,000 to $9,000, and 28% the full $10,000. So thank you. I would have suspected when this poll question was asked that there would have been fewer people that received the EIDL advance, because I have heard from a number of individuals that they received an EIDL, but not the EIDL advance. And that is important for the next phase that we're going through right now, called the EIDL Grant. So we will stop sharing that question, and maybe we'll ask something that's. So this next question is going to be related to some business news that's going on of big interest. Many of you might have noticed a little thing I like to call the bump at the pump. And you go to fill up the car and it's costing a little bit more, which down here in Bakersfield is not a bad thing. And the price of oil this morning for a barrel of oil reached its 52-week high. The 52-week high for oil is nearly $62. So my question is going to be, my pop quiz question this time is going to be, what is the 2 weeks for that barrel of oil? So reached its high earlier today of 62. We're looking for the closing price that actually has happened in the last 52 weeks for a price of oil. And your choices are $36 a barrel, 24, $16 a barrel, or minus $37 per barrel. So jump in and vote. High 62, you have 3 choices in the positive, and then a negative range, negative price for oil, which is pretty fascinating. So going to give you another minute or 2 to jump in. So with over 50% of you voted, let's end this poll. Got up to nearly 55% now. And actually, you are correct. 32% of you anyway that say minus $37 a barrel is what oil traded for. Kind of a very unusual situation, to where many of us around the Bakersfield area, our best joke was in April when this happened last year was, hey, let's drain the swimming pool and fill it up with oil. They're going to pay us $37 for each barrel we put in there. So kind of a very unusual timing situation that happened, and it happened very quickly and flopped back into the positive the next day. But oil did actually trade for minus $37 per barrel. Okay. I guess in the pandemic. So got a lot of stuff that we're working on right now. So let's continue to move on and look at our special guest today. So we're going to bring, as we often do in Keith's our guest, bring him in early and let him provide valuable commentary, since as the CEO and president of Midstate Development is, as you know, the largest by volume SBA lender in Kern County. I'm wondering if that's going to hold true after all the PPP, but I'm still going to say it. He's the largest SBA lender by volume in Kern County, and has been dealing with all of these issues with a lot of his clients and a lot of individuals in the community that question the various programs that we have been covering. So as I mentioned earlier, Keith has been involved with a number of our webinar Wednesdays, even going back before the pandemic, talking about the 504 loan program and many of the other ones that are specific toward building businesses here in Kern County. Keith, great to have you back. Welcome, and thank you for joining us.
I don't count the PPP. It's a one-time program, so it's like going into the Hall of Fame. You put an asterisk by that. So like a lot of folks, I want to forget 2020 and the first part of 2021. So we'll exclude that in the calculation. But thanks, Kelly, for allowing me to participate.
Well, and like I've said, over the last 9 years, I believe, the largest SBA lender by volume in Kern County. So, you know, one of the things just to look at real quickly are just the COVID sites, and we're going to ship these out to you for vaccines. We've got a lot going on, and I'm sure you're working on your vaccines and your testing and keeping all that good. And we also usually will look at the guidance. And I think we're even going to skim over the guidelines just to make it brief and say that we are trending in a very positive direction, as is the state of California. And, you know, most of the US, as we see with the state of Texas opening everything up as of yesterday. I think we're trending toward that. Not there, but in California, we're at least trending that way. Our rate of our percentage rate in Kern is in the low teens, right around 10 or 12%. So we're moving and working toward getting the businesses back open again.
Hey, Kelly, just a personal tip on getting your vaccine. For those out there that have gotten their first vaccine, it's important that you sign up for your second vaccine. I neglected to sign up for a date on my second vaccine, and I'm having to wait an additional week. So just an inside baseball tip. If you've gotten your first one, I think it's important to go ahead and pre-schedule your second one as soon as you can.
That's good advice, good sound advice. Okay, so one thing we've been going over is there's just a variety of programs that are open right now, just a number of programs in various stages, and we want to just keep everybody to the status of the programs. As you know, the PPP 2021, as I call it, is open now only for less than 20 employers. So if you have over 20 employees, the portal is closed. And we'll look at some of the numbers on this in just a few minutes and get into maybe a lot of the things that are interesting going on in PPP right now. So we're seeing a lot of interest in the first draw of PPP for the firms that didn't get in, and that is currently open also to those that are 20 and under. The theaters and venues, we've talked a lot about the Shuttered News program, the $15 billion in grants that's available to a number of businesses, and that is hopefully opening soon. We do have new guidance that is going into, and it probably already is in the chat box. So new, fresh guidance that came as soon as this morning on frequently asked questions. We won't dive into those today because of time, but They are there to where you can grab if you are interested, if you are a shuttered venue or wanted to learn more about the program. It's in the chat. You can. Really, another program that had guidance this week and is gaining a lot of traction is the Employee Retention Tax Credit. And again, it was amended 2020 and has rules where it'll be open until 2021. I believe it is now open in actually for the 2020 year period. And we're seeing some really interesting things happening with that as well. And that kind of ties back to the PPP forgiveness. Whereas those that actually have applied for forgiveness and taking maybe 100% of your original PPP are now at somewhat of a disadvantage because of the opportunity for those that haven't to take advantage of the employee tax retention credit for 2020. And we talked all 2020, Keith, about the employee retention tax credit wasn't an option if you had a PPP. And again, that all changed late in the year. So we'll be talking a lot more about that. The guidance that came out was 102 pages. I'm a little slow on the reading, so I obviously didn't consume all of that before today. It is also in the chat for those that want more information on it, but it is really becoming a viable and really is now really affecting kind of your PPP forgiveness strategy. And the numbers that we've seen are somewhere around 35 to 40% of you have already filed for PPP forgiveness. We're seeing a lot of you that have filed for PPP forgiveness that was in process. You're running into PPP second draw errors. So the glitch in the system, talked about it a few weeks ago, lingering on and creating a nuisance for a lot of borrowers out there. Even so, it's unsure about how many loans are actually in the queue right now as far as trying to work their way through some of the errors with the new E-Trend system through SBA. The status of the the tax deductible for PPP funds is now finished, and PUA unemployment for displaced contractors continues to run through March 14th right now. And the new Restart grant that opened up last week, I believe the final for the $5,000 grant, the last day to enter is, I believe it was a 1 week period. So that's today. Keith, anything jump out at you there?
Yeah, Kelly, I think it warrants a separate webinar with the ERTC. I think that's an important change, especially the ability that you can do with 2020, and then hopefully the 2021 rules will come out. I went on the IRS website this morning, and the 2021 rules are not out yet. But I think it's important, something that the folks out there in the webinar community needs to stay tuned, and perhaps you can have. I know you had a couple of accountants on in prior webinars. I think it's really important to get it from those folks, and it's a big advantage to a lot of businesses. So I highly recommend that. I'm assuming we're going to cover the elephant in the room on the sole prop rules, Kelly, in the next couple slides.
Oh, it's
okay.
Oh, it's coming up.
Okay.
So we'll get there. And then just maybe now that those are just kind of, again, some of the needed items, action items that you lender. And the shuttered venues is through the portal. And I do like your advice on the employee retention tax credit, because I believe it is a full program. EIDL Loan is still open. One of Keith and my favorite programs, favorite pandemic program. And we'll talk a little bit about some of the changes that are happening with EIDL Grant and the old advance that was given that we had the poll on today. Talked a little bit about forgiveness. File, I would actually wait on that. I would stay on PPP forgiveness. If you haven't filed, I would be in pause rate. recall you have 10 months from the end of your covered period. So the very earliest ones, if you have a very earliest covered period or the very earliest PPP loans in April, if you received it on April 15th, for example, and then extended it out for a 24-week covered period, you have some time until June in order to file for forgiveness. But with so many rules changing and us not knowing if they're retroactive or what you can do if you answer that, there's just too many variables and too many questions to go through PPP forgiveness at this time. Plus, Keith, probably your lender would thank you for that also.
Yeah, what I'm finding out in the lending community is they are actually getting quite a few second draw PPP 2 applications in. So yeah, you're always encouraged to get your forgiveness as soon as you can, but being the last one in is not a problem on the forgiveness piece.
Okay, let's jump into PPP and talk about some of the changes that have happening and some of the good. And we covered this slide a little last week, whereas the 14-day period, which came out of the Biden administration, and with good reason to try to get as many smaller businesses in there. The SBA threw a statistic that said 45% of the PPPs went to businesses with fewer than 2 employees. I didn't know if that was going to be a red flag that was filling up. And all of a sudden in midstream, it's like, okay, well, let's put out only 20 employees or less, but that's where we are right now. And I think this is as good a time as any to talk about the sole proprietor issue that we are seeing, because it's kind of a conflictory aspect to where you can come in with fewer employees than 20 and register and get in. And let's say you're an independent contractor where you don't have any employees. There has been report, it came from the Oval Office, so it's probably about as legit as you can get. And saying that they were going to look at a different analysis as far as the grant size for PPP second draw. And last week, we heard about the stimulus actual advice and guidance that was going to come out on sole proprietor. And then it came out saying it was going to come this week. So, and what I have heard is they're going to change the criteria and net income for sole proprietors up to that 20,833 max. Need a net income up to 100,000. Is that what you're hearing?
Yeah, I went on the SBA website, as I do. It seems like every other day, to see if they released any of the rules yet, especially for the sole proprietors and the gig employees. And it's not out yet. Everything I've read is that they're trying to pivot away from net to gross numbers. So, as we know, most small businesses, and rightfully so, try to tax plan to reduce their net income. So if they do effectively pivot to looking at the gross income numbers, then that's going to free up some more dollars for the sole prop and the gig workers. The challenge is what I've also seen is that if you've applied, they have not determined your ability to go back and increase it. So it's sort of a catch-22. You have that window. I think the window ends March 14th for the smaller businesses, but the final rules aren't out yet. So that's kind of frustrating. We've received some calls here that especially the sole props, they're trying to get in, but if they apply now without knowing what the multiplier is, they may be held to the old rules. So that's the big challenge that I'm seeing, especially with that specific category of borrowers. Looks like I may have lost Kelly. I don't know if Maureen, are we seeing Kelly on the screen? He is off of my screen right now.
No, it's your show right now.
It's my show right now.
That's right, yes.
Well, I am going to, oh, here it comes, Kelly.
Much more broadly.
We can hear you, Kelly.
Hey, Kelly, I covered the fact that the final rules or the pending rules for the sole props and the gig workers have not been released yet. They were supposed to come in per the White House this week. We haven't got them as of you know, an hour ago. So unless something's come out since we've been on the webinar, that information is still pending, and that's impacting quite a few of the borrowers out there. The challenge, as I mentioned before, is do you apply under the old rules, which is net income driven, or do you wait with the proposed rules that supposedly are more towards the gross income amount?
Boy, it's really putting a lot of the small businesses in a bind, and this is supposed to be helping them. It's really going to be interesting to see if they come back with the retro aspect of it.
Yeah.
You got in under the newer rules that hopefully will be coming out by Friday. We'll know a lot more, but we hope to have been talking about the final rules as of today, but as of this moment, not yet.
Yeah, and again, the challenge is they have small window open. So I think that window ends next week, if I'm correct, Kelly.
Yeah, and another thing is, you know, the entire PPP program is scheduled to end on March 31st. So it only has 4 weeks left. And it'll be interesting to see if it is extended even further from that. So some interesting things going on with PPP for sure. And our internet for that matter, but you know, that's technology. So moving along, one thing where we are now on total PPP, there's 284 billion. And as of Sunday, we've spent, or the actual number of loans that have been approved are up to 156 billion. So, you know, we're getting pretty well through this. It looks like there's still plenty of funds to go, but also, you know, others there as well. So moving along, glitchy today, apologize for that. Is that just some of the things that we're also seeing to remind people is now that a lot more of the funds that are available, and this is just kind of a reminder, when the new rules came out on December 27th, there were new eligible expenditures for PPP workplace cost, a lot of the supplier costs that weren't there originally, and other eligible forgiveness. If you were unable to draw all of your first round PPP funds, then you weren't eligible to go after the second draw. But with these new rules, by going back, you can go back and you can see those other expenditures that you might have, including even software cost, and maybe then make a run at the second draw of PPP. We're seeing a lot in there in the first round. And again, it's that 25% reduction that is crucial, along with the special rules that go up to the 150,000 to get you kind of in the door for those smaller applications.
Kelly, I had an interesting question this morning in that 25% reduction. I had one of my customers that I've done, you know, SBA loans for, that's a physician, and they received a Medi-Cal payout that kicked them pretty close to that 25% reduction. And the payout was part of the stimulus reimbursement. So the question was, should they have shown that in the gross? And by showing it in the gross, that was going to kick them over the 25%. I couldn't effectively answer the question. I think technically you have to show that as income, but with that then eliminates them from the PPP too. So there are little things like that, the devil's in the details, that further clarity is needed going forward.
And I'm hoping that that part of it is in the next guidance as well, because that is really something that has kind of hung up a few borrowers that are kind of on the fence about going after round two and if they actually are eligible. And those eligibility issues are key right now. So I guess we'll know more when we know more. Okay, well, we do know more about the California pandemic hardship, a pandemic relief program that the state of California is putting out. And many of you, as I mentioned earlier, applied for the California Relief Grant program. Initially, there was about nearly $500 million that was the program. And part of the state's pandemic hardship rules are going to be moving forward to where they increase that fourfold to 500, from 500 million to 2.1 billion. And also allocates 50 million for nonprofit cultural institutions. So for a lot of people that were frustrated by the process of applying for the California Relief Grant and maybe frustrated by being waitlisted and not being able to actually be funded, there's going to be 4 times more that amount of money that's going to be available. One of the other things that's in this legislation that has been signed by the governor is also fee waivers for those businesses that have been heavily impacted. And that's going to include nearly 59,000 restaurants and bars who pay annual fees to the Department of Alcohol and Beverage, and maybe some other fees that range from a total of $450 to over $1,200. And also they'll be looking at individuals that work in barbershops and salons and other cosmetology professions that are also greatly impacted, and reduce fees in those areas. So those are a couple of the things that are really coming for relief for Californians experiencing pandemic hardship. There's some critical care, child care that's going to be available in this new program. So in addition to, having some other federal programs that actually greatly benefit some child care that's going on right now, and also the child care tax on your income tax, and also some programs that are direct pay to individuals. California is going to be subsidizing child care statewide for a number of individuals. So that's something you might want to check into, as along with some of the other things that are going to be additional aid for individuals and families, and some relief support for community college students. And then the next one is the CalFresh outreach for students at UCs and also California State Universities, including Bakersfield, I'm sure. So those are some of the other programs that will be available, as well as the direct pay that for incomes of under 30,000. So haven't really talked about this. It's been law for a couple of weeks now. And really there's some really good things in there for business, being the fee relief, and also being more monies that are going to be put into that particular aspect of it. So Shuttered grants and venues, did talk a little bit about that, but really haven't got into those things that you really should prepare for if you plan on going after a shuttered venue operator grant. And one of the things is we've discussed a little bit about trying to do a little analysis on what would be better for you. Would it be the PPP second or first draw, or the SVOG? So look at the benefits of each and how they can actually reward your business for the prospective application. One of the things that are going to be required on this, and I know it was required last week when we talked about the City of Bakersfield program, and that's a DUNS number. It is acquired through Duns and Bradstreets. It's free of charge if you don't have it already. And then once you get your DUNS number, you need to go in and register for the SAM.gov, the System for Award Management through the federal government. And the SAM.gov is a process that could take up to 2 weeks. So you don't want to be waiting for your SAM registration if you don't already have it by potentially delaying your opportunity to be an early filer in the Shuttered Venues Operator Grant Program.
Hey, Kelly, the SAM's registration is not that complicated. Yeah, the response may be a long time, but it will take you all of 5, maybe 10 minutes max to do the SAM registration.
Yeah, great. And if you have any problems, we do have an outstanding procurement specialist who will gladly go over it, contact the ADC. Great time for a plug. So also you need to determine the average number of qualified employees in the entity over the last 12 months. So you're going to need some employee data to have at your fingertips when you apply. And also you're going to need to know what your gross earned revenue loss was from 2019 compared to 2020. And remember, that also factors into the queuing process of how soon you can apply. It's going to be based on the size of your loss from 2020 over 2019. A little bit on eligibility, and I think eligibility was expanded today, so we'll jump through right over this one and jump over the eligibility. And we're going to do more in depth on the tax credit, so we won't get into a lot of that, but just some of the preliminary information on that, on what it is now and some of the guidance that's out. Really a valuable program that we will be discussing in the next few weeks here, or in a different opportunity through another different type of training. So we did go into our poll question today on the targeted EIDL grant, and a number of you is kind of across the board. And what we found in the last week, because there was a lot of questions I was getting on what constitutes an actual low-income community. And so one of the things that we were able to do was to then kind of go in and actually look at the particular program, not this one, but this one. So we did find a map that actually targets communities that are SBA targeted, EIDL, advanced low-income communities. So I put in our office address here at 1631 17th Street and looked at this, and the purple designates that we are in a low-income area. And you can actually go to this, and we will actually pop this. I did not recall to put it in the chat today, but we will send it along with our resources that comes via email. But as you look at this, it's a map that'll tell you if you're in that targeted area. So recall that if you received a $4,000 EIDL advance, you will be eligible up to $6,000 for another particular grant through this program. That is part of not only both the Economic Aid Act of 2020, but also the new stimulus program targeted by the White House, where there'll be additional funds for it brought in. So just another resource to kind of tell you if you are eligible, as we look over kind of over the state and kind of like in a macro level, you'll see that the purple is qualified areas. The yellow is non-qualified, so low income community. They're all based on census tracts and gives you an opportunity to go in and see where your business address is if you will be receiving any more funds through that particular program. So that's something that I think is valuable moving forward. And moving back along on the EIDL front. And there it was right there. See that section 49D subchapter E, I know you didn't like it when I told you that's to go there and try to find if you're a low income community. So now we got a map. A little more on the targeted EIDL. But let's talk a little bit about the next stimulus program real quickly, because I want to leave a little time for Keith to get into a lot of this valuable stuff of what's going on with SBA lending and other things. Here are the main business actual programs that are going to. We talked a little bit in the past and will again soon about restaurants and bars and eligible food providers, the $25 billion in grants that's available. This kind of sparked my interest because there's going to be $15 billion more for the targeted EIDL advance payments, is why we just showed the map. A little bit also added to shuttered venues, a little bit more added to PPP as well. Kind of, I believe those are kind of the ones that get in the transition from when the program is ending, make sure they have money. And then there's going to be $175 million to create a community navigator pilot program. Allows lower income areas an opportunity to try to have a community navigator explain a lot of the programs for COVID relief and a lot of the technical assistance for disadvantaged individuals, women, and veterans. There's also some money for the airline industry. There's a little bit about what we have on restaurants, covered a little bit last week. Since this probably isn't going to open, it's still got to pass the Senate and be signed by the president. So it's probably still, depending on how soon the guidance is, a month or two away. We'll get into this a little bit more, but just kind of keep in mind this could be an opportunity for you. And Keith, what's going on small business lending wise? A lot has been going on, a lot of changes.
Okay, Kelly, I'm going to see if I can share my screen real quick. And I am. One thing I want to add that you had talked about, I think it was in the chat, something that I do consistently here is I go on the SBA's website, sba.gov, and the information obviously changes on a consistent basis. But there are a lot of sources. If you let's say, for instance, you're a shuttered venue, if you go in and you look at the frequently asked questions, then you may get a lot of the information you need to have, especially when you're trying to prepare to make for the ask for the grant. So I look at that on a consistent basis. And the other thing I look at is the IRS website, on a consistent basis to see how they are going to recognize certain COVID incidents. So two things I would do on a consistent basis. Real quick, I want to talk about what's changed in our world, and we're a SBA lender, we're a 504 lender, but I'm talking about some of the relief that's out there. And there's a temporary fee elimination for the program, both the 504 and the 7A. Kelly's already talked about the CARES Act Section 1112 tax implications. There's additional relief for qualifying loans. Again, these are folks that already have SBA loans. There's some changes in the refinance rule. And then real quickly, I'm going to go through some of the COVID underwriting requirements that if you're out there borrowing money and your lender and or an SBA rep starts asking you these questions, this is the reason why. So real quick, under the CARES Act 2 that was passed at the end of the year, it was subject to appropriation. And I say that because you'll find that some of the monies allocated for certain programs were not enough based on the early ask. So you'll see some changes. And the more important thing is the implementation takes time. So there is a certain amount of frustration. I know on the PPP with sole proprietors, we have that same type of frustration in some of the traditional SBA programs. But we do recognize that the SBA is working pretty hard on the PPP, which is the main focus. Then you look at the EIDL, then you look at the forgiveness. So some of the other programs are taking a little bit of time. Fee. This is big in our world. There is an elimination of a third-party lender fee and elimination of a processing fee. So what this effectively means is that with customers that are applying for new projects through September 30th, 2021, there is a significant reduction in their fees. Again, the whole intent is to encourage expansion and growth. The other thing is the Section 1112 tax implications. And it's very similar to PPP, but for those folks out there that had SBA loans, whether it was a 7A or whether it was a 504, and where the SBA made their payments, there was always a question, would that be a taxable event to that particular borrower? Well, it is not a taxable event, along with the fact that any tax deductions that were arising from those payments will now be allowed, the borrower will be allowed to take those. Now, again, this is federal. I don't think we've gotten the rules for the state of California yet, but for the federal tax returns, any Section 111.12 payments that you receive is not a taxable event. Also exempt from federal taxation, and we covered it as early as the PPP debt forgiveness, advances and grants under the EIDL program. Again, stay tuned. I suggest you always reach out to your tax preparer or your accountant for final rules, but this is what was rolled out at the end of the year. So payments. We were those that had SBA loans last year and part of this year were receiving payments from the SBA. They also allocated another $3.5 billion for additional payments. So the new rule is now if you have a loan that was approved by the SBA prior to March 27th, but not funded, you're going to get 3 months payments. Also, you will get another 2 months payments starting in February, but it's going to be capped at $9,000. The additional 3 months, originally they were going to give you 6 months, but quite frankly, they ran out of funds. Now there's an additional 3 months payments, and this is sort of convoluted, but if you're in a certain NIAC code, and I'm going to show you the NIAC codes. You have codes starting with 61, educational, arts, and entertainment. I can provide this list for you, but what effectively it means is that not only did you get the original Section 112 payments, but you had the ability to get additional payments if you were in one of those hard-hit areas. Recapping, and there's a lot of different payments out there. We always give a disclosure because the SBA guidelines change. But if you have a loan that was approved between September 27th, 2020 and March 27th, 2020 and September 27th, you get the 3 months. Loans approved now, February 1st to September 2021, you get 3 months, and it's capped at $9,000. And if you were in that short window of loans that got approved from September to January, you get no subsidies. And the whole intent is if you were applying for a loan that relief was not needed at that particular time. Refinance, one of the biggest things that under this is if you have an existing SBA 504 loan, you can refinance that loan up to 90%. So an example is if you had a 504 loan and it was originally for $500,000 and it's paid down to $75,000, you can refinance and pull cash back out for your business up to 90%. We've already gotten a couple calls on that here. COVID underwriting, there's a list of questions. I don't want to go through all of them, but it's primarily, what's going on with your business during COVID. These are questions that a lender will ask you, and the SBA might ask you. And they're talking about if you're in a stay-at-home order, if you had some problems with delivery, if you having to be shut down? Did you get some type of deferment? What has directly impacted your revenue? Is social distancing a problem? Are you a travel agency? Have you been shut down? How reliable is your financial statements from prior years going forward? Has unemployment in your area impacted you? Were you concentrated in a certain customer base? We have a lot of restaurants that have pivoted to carry out, and quite frankly, their margins are better and they're making a little more profit than they were doing the dine in. So that's one of the areas that we do address in COVID. And that's it, Kelly. Again, I just wanted to touch on that real quick, and I am going to pivot back to you so we can have some questions and answers.
Yes, let's get to Q&A. Okay, let's start at the top. We're going to work out of the Q&A box first. So if you have a question, please go to the Q&A section and put in a particular question for us. Okay, first question. I was a sole proprietorship in 2019 and incorporated by the end of that year. Didn't make any money in 19, and 2020, we still didn't pay ourselves because we're barely starting up. Qualify? If so, what proof can I submit? So I'm assuming you're wondering if you can qualify for the PPP. And the PPP is the Paycheck Protection Program, and it is based on your employees, but it is also based on a component of the self-employment income you make. That's a pretty good question. I would probably defer Keith or a lender who would be able to handle some of the intricacies of that. Any ideas, Keith?
Yeah, that actual question came in to us here. My suggestion would be twofold. I would reach out to the lender that they bank with, but I would also reach out to the SBA and explain the scenario. And the scenario, as I understand it, is they were a sole prop in 2019. They converted to a corp in 2020. So they're trying to determine their eligibility. So yeah, that's one of those gray areas where I would reach out to the lender first or then the SBA.
The other thing I would look at is maybe the timing, depending on how your eligibility shakes loose on your timing on if, and it was the end of the year you converted to a corporation. So, I remember we answered this question a lot during PPP1 or something similar, but I just can't recall the exact, but I believe from the prior FAQs, SBA FAQ, and also some of the interim final rules addressed ownership of this particular subject if it changed late in the year. Okay, next question. And the question is, but waiting on PPP forgiveness, the first payments are coming due. So the first payments for EIDL, I believe, are coming due if you have an EIDL loan. But for PPP, it isn't until it's not due until the end of the 10 months of your covered period. So I think people are starting to see where EIDL payments that were deferred for a year, they're starting to see statements on that. Maybe maybe you're confused with those, but the PP should not be coming due because you do have 10 months in order to file. Your lender then has 2 months in order to submit it to the SBA, who has an additional 3 months. Okay, next question. I'm a small business and I have put out a lot of company and personal information trying to get loans, grants for your business. I was interested if we would do something on fraud protection. I have skipped some grants because I'm unsure. I want to give some of that information out. Well, the first thing on fraud protection I would have you look at is any correspondence that comes from the SBA will be from an email address that's sba.gov. There could be something that before that came out, there have been a number of different areas to where there has been some type of fraud. The fraudsters are going to be out there, I understand, but one of the things that we see that is legit, and we're still seeing it, is a number of people are getting notification from SBA regarding their EIDL loans that they need to submit either hazard insurance or some other type of legal document. And again, go to look and make sure that that is an approved, actual official SBA email address it's coming from. And if you have a problem, if you have a question, if EIDL, call and ask them, the 888 number, which is widely distributed.
I guess the one thing I would add to that, Kelly, is, you know, there is a industry out there of folks that will say they can get you an EIDL loan, they can get you a PPP loan, and they're a somewhat of a third-party provider. I would be a little bit skeptical of, you know, dealing with somebody like that, whereas in many cases you can go directly to the SBA or directly to a lender. So if there's a fear for fraud out there, I would think it would be in those type of providers.
Yeah, and do always safeguard your employer ID number, particularly your Social Security or your employer ID number. So always try to keep those safe. But next question. I want to know which program would be best for a sole owner of a small beauty shop. If you get a PPP loan, can you do grants like I also received BCares? So the answer is yes. And you know, you can receive multiple loans, but right now I'm thinking that for your particular business, depending on how this guidance comes for sole proprietors for the second draw of PPP, and contingent on you receiving the first draw, is that would be the best resource for you. And the reason of that for that is if the ruling does come as it is anticipated, it's not official and it's not out there, but if it comes that you can use your gross revenue and your gross revenue is over $100,000, you could qualify for up to $20,833. Okay, just want to double check. Are you saying that if I received an EIDL advance last year, I do not need to apply again for 2021? SBA will contact me. And yes, that is correct. SBA is starting to email people that are in those eligible zones that we kind of looked at on the map in the lower income census tract communities. And they are providing you an email and then they're asking for additional information. The additional information is going to be, you're going to need to prove over an 8-week period that you sustained a 30% decrease in 2020 over 2018. You are also going to need, so that's generally the monthly sales, almost on a monthly basis for a 2-month period of time for 8 weeks. You also may need to provide some other information, but that will be coming to you from SBA. Okay, I think I got one for you, Keith. SBA paid our SBA loan for 6 months in 2020. Are you saying we now owe for 3 months of that? If so, it affects our 2020 tax return, which has already been filed.
No. What I'm saying is the rule changed in that loans that received the 6 months payments, they were fine. They were under the first CARES Section 11112 payments, and everybody got 6 months. What happened was when they rolled out the new rules, that they included loans that were approved during that time period that weren't funded. And those loans now are getting 3 months as opposed to 6. So there's no clawback. Don't worry about any of those things. You just happen to be the beneficiary of the first round of 6 months. And you should also have received your February and March payment, 2 additional months during that time period.
Next question, am I able to come in and get help applying for the new programs that are open? And the answer to that is yes, you are able to get assistance. If you will send me an email, I will, or go to our website at csubsbdc.com, or you can send me an email and we will get you signed up to meet with one of our free confidential consultants. Our consultants are independent contractors, so they work through this COVID crisis however they and their client are comfortable with, either face-to-face, on the telephone, or via Zoom. So that is up for them to decide, and you. So by signing up for a client, yes, we can get a qualified consultant in front of you to analyze your situation to see what programs you might be eligible for and what would be best for you. Okay, next question. Are real estate loan terms appropriate now? Questions. And yes. If so, what are cost terms for purchase of property to run your business in? So I think we're asking, what are the terms of potentially the SBA 504 program?
Sure. Well, I can take that. The amortization for the SBA program, you have 3 types of amortization. You have 10-year, 20-year, and 25 years. So those are the amortizations where you can pay the loan off. We partner with a bank. The bank will do 50%. We can do up to 40%. So our 40% will be either 10, 20, or 25. Our last rate on our 25-year note was 2.602. So if you've heard me on prior webinars, if you have the ability to borrow to buy the property you're in, if you're leasing, you have an opportunity to expand and buy something, the rate environment on term real estate is the lowest that I've ever seen. So, and if you're looking at a 504 program or 504 type of loan, before September of this year, your fees are going to be reduced drastically.
Is there any forgiveness for an EIDL loan I received last year? Let's answer that one first. And the answer is, the EIDL loan that you received from SBA, the answer is no, it is not a forgivable loan. 30-year loan for 3.75% interest. Now, if you're referring to the EIDL advance, as part of the Economic Aid Act in December of 2020. So the EIDL loan is not forgivable. The EIDL advance turned out to be, and for all intents and purposes, forgivable.
That's correct.
And regarding the PPP for sole proprietor, does the prior EIDL loan affect this in any way that it should affect it? Your PPP for the sole proprietor will not affect if you received an EIDL loan. That comes up on every single one of these is if your business was affected by COVID, and if that is creating, need for these particular funds. And I'm paraphrasing somewhat. So, but you can apply for PPP second draw if, as a sole proprietor, or for first time loan. A couple of you are asking if we can email the presentation. We will send out the resources that we discussed, some of those in the chat, a copy of today's presentation, and other stuff. It sometimes ends up in individuals' junk or clutter or whatever folders, but usually day. So be looking for that. Are you saying the new PPP calculations for sole props are only for second draw? And you know what? I'm saying we need more guidance on that. I'm pretty much saying the questions getting people are those that had the PPP and now they're looking for the second draw. If I were to guess, I would think that it would be available also for the first draw applicants. But again, that's going to come in the guidance that we're eagerly awaiting that is promised before the end of the week. I have a couple of clients struggling to find where to go to start making their EIDL payments. They got notices without directing them where to go. You know, the SBA Disaster Loan Office has a great email, and they have great telephone support service. Yeah, I would go to one of those two places and call them directly. They have a call center, and they're based out of Texas. So if you end up with somebody in Norway, I would probably hang up. Norway's a great country. Don't take it offensive in Norway, but you're going to be dealing with people in Texas. So I would call them, or I would email them and ask them where payments should be directed. And then I'd probably verify before I send a payment. Is this PPP sole proprietor loan 100% potentially forgivable? Whereas we haven't had anything on the second draw or PP 2021, my assumption is yes, it would be. So I would say potentially. And generally what we saw with sole props and independent contractors was they had no real other expenses other than paying themselves during the pandemic. So a few of them did. A few of them had some office expense or other, but they were able to take 100% of that for paying their payroll, their paycheck over that period of time. How does the employee retention tax credit work if you had already received PPP round 1 and 2? Okay, I'll take that for starters, Keith, and fill in the blanks if you can. How does the ERTC work if you've received PPP for 1 and 2? The way I think it works is that we receive guidance for PPP round 1 just in the last couple of days from the IRS. So we do know now basically what you need to do for 2020, your 2020 first round of PPP. And it is not going to work for PPP funds that you used for payroll. It's going to be non-payroll funds for the payroll Paycheck Protection Program. So let's say you used all of your PPP funds for payroll until the last quarter of the year. And then the last quarter of the year, you retain these employees. You have the tax credit that can work for you then. As far as round two guidance is not out yet. We are eagerly awaiting round 2 guidance, and we'll know more once it comes out. Okay, that looks like it for the questions for today. Last glance looking into the chat box, I do see the EIDL low income map and a lot of the other things that we discussed today. Oh, I see one last question. If I did not get an EIDL advance, can I apply for an EIDL grant? And that's an outstanding question. If you didn't apply for the EIDL, okay, one more question on this. I think you originally needed to, let's read that one more time. If I did not get an EIDL advance, can I apply for an EIDL grant? Now, I'm assuming you applied for an economic development disaster loan and EIDL loan, because that was the trigger to provide you with an EIDL advance. If you're one of the few people in our poll that did not get an EIDL advance, can you apply for an EIDL grant? I hope. I hope. I don't know of a way to do that yet. I believe it is going to be opening up. We're going to have to stay tuned and get more guidance on these particular programs, but maybe that's a phone call that maybe SBA can help you with directly. SBA does have also some webinars that they are doing, and they're doing them for targeted specific groups. I just got an email on that, and that is something you might want to look at and ask. I don't know if they can answer your sole proprietor question until the final rules come out, but it's always best to go right to the source, right, Keith?
I wouldn't. And so far as the advance in grant on the EIDL, the SBA has been really good at getting back to customers via email and or via phone call on EIDL issues. So I would start with the SBA website and then work from there. If you do run into a problem, you can email them, and they're answering almost all the questions. So I'm pretty confident in saying that.
Great. Well, that looks like it's about it for this week. I'd like to thank Keith Brice, special guest, for another outstanding effort on Webinar Wednesday. We'll be back next week, maybe without internet issues I might not have, but we'll see. So anyway, for Keith Brice, Kelly Bearden, have a great week. Let's get some more guidance, and we'll see you soon. Take care, everybody. Bye-bye now.